Good morning and welcome everyone to Moneycontrol live stream. We're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity markets may get off to a positive start but await the big trigger. US major indices record highest closing since 2022, close higher for straight session. Talk about the US CPI data. Well, for November, at least for the US, it initially had dampened the sentiment, but of course recovery took place in the fag end of the second half of the trade. GIFT Nifty right now indicates a positive start coming in for Dalal Street, about 21,050 mark, at least for Nifty. It's what GIFT Nifty suggests at this point of time. Asian stock market, they trade mixed ahead of year-end's final decision from Federal Reserve and clues on whether the central bank will cut rates next year, which is at play. CPI inflation also rises to 5.5% in November. That's also the word coming in, at least when it comes to the macro data. Brent is seen at the lowest level since June. But FIIs continue to be the buyers out there. But let's address the market open there for you. It is a flat start coming in for Nifty 50, like we suggested. It may get on to somewhat a positive start, or rather, let's say a lackluster start this time around. And then it waits on to have more cues coming in from the global markets. It's no surprise there that we're looking at a rather lackluster start coming in for the markets. Sure, it could have 20,900 mark is where Nifty 50 is right now. Bank Nifty, well, a bit of flat start with negative bias there. And also, let's talk about RIL and the other broader indices that we have, mid cap and the small cap index, just to see where the index heavyweight essentially is contributing to the gains or no. Well, mid cap index, 0.1% of gain clocked on that one. It is a flat start indeed, even for the broader counterparts. Small cap, a bit of outperformance there. Nifty PSU Bank, let's pull that up because thus far Bank Nifty and PSU banks have lent in some amount of rather have shown some traction. Well, PSU Bank at least a flat start with positive bias building in for PSU banks. Nifty IT not participated into the rally and has seen few more corporate development, at least when it comes to the Infosys CFO. Well, a bit of weakness creeping in on that one as well. Let's talk about the top gainers and the top losers that we have before jumping on to more sectoral indices. But of course, I'll be looking at something like an ITC. Of course, there was an analyst meet which took place, and we're going to be talking about that enough and more of what brokerages bring out on that one. BPCL, NTPC, these are some of the top gainers that we have. Eicher Motors, UPL and Tata Steel. These are other top gainers that we have right now. Hindalco, JSW Steel and Adani Enterprises too are doing well in trade. So clearly it is a day when metal stocks are doing too well. Let's talk about the top losers there, right? Just to see where the momentum actually is building up, or rather a bit of weakness at ONGC, TCS, HDFC Bank. Along with that, we're also looking at Infosys, Apollo Hospital and Reliance. Well, that's where the drag is also coming in from, apart from the bunch of IT stocks that we've spoken about. Kotak Mahindra Bank, Bajaj Auto and Bajaj Finance, these are some of the other top losers. So essentially, it's banks, RIL, IT stocks which are all exerting pressure, but metal stocks seem to be doing well in trade this morning. Well, a fairly flat start coming in for markets, but let's bring in our technical guest, Rajesh Palviya, who's a Senior Vice President at Axis Securities, who's here to help us with the levels, the recommendation and the top strategy for the day. Rajesh, good morning.
Good morning, Nickey. So it's a flat opening for the market. I think
Sure.
looking at the data setup, 20,850 is the important support area based on the put concentration. In the previous session also, we have seen that almost Nifty took support from those level and some pullback action was there in the last half an hour of trade. So for today's session, 20,850 needs to be keep as a stop loss to buy in this dips. If you get chance to buy around those level, you can initiate your long position around 20,850 zone for Nifty spot and keep your stop loss at 20,800. That's the major put based concentration at this moment. So buy on dips should be your strategy towards 20,850. For Bank Nifty, 47,000 is the key level to watch for. We are almost trading near to those level. If we able to hold those level, then some pullback action we can see in Bank Nifty. Else, if we breaks below those level, then possibly it may go down to the next support area of 46,900, 46,800. That's the major support area based on the put concentration. So both indices, buy on dip should be your strategy. Overall structure is bullish. Market breadth is positive. Mid cap, small cap still doing good. So I think stock specific buying momentum is still there, and we believe that this momentum is likely to continue. So there is a lot of opportunity in the market to buy stocks at this moment as the index is consolidating.
As has been witnessed in the bank, in a few banking names as well, right? There was an Axis Bank deal which has already taken place where the block deal 3.1 crore shares worth around 3,465 crore have changed hands at a price of 1,120 per share for Axis Bank. To bear in mind the fact that Bain Capital was to pair in 1.1% equity in the counter, and that was at a discount of 2%. Rajesh, coming back to you, HDFC Bank and Axis Bank, within the two, if one was to suppose initiate a buy position there or go long on these stocks, would you suggest a buy there, and at what levels?
So Nickey, I won't be able to comment on Axis Bank. It's my parent company, so due to compliance, I won't be in position to comment on Axis Bank. But yes, looking at the HDFC structure, stock is almost on a verge of giving breakout of its multiple supply zone, that is at around 1640, 1650 zone. So if at all HDFC Bank manages to cross above 1645, 1650 zone, then there will be a short covering action we may see, and then possibly this stock can scale up to the level of 1700 also in the continuation of this pullback. So for HDFC Bank, one can look to buy at this current level also with stop loss of 1600.
Out of Indian Bank, the bank is going to be issuing in shares to the institutional investors at a floor price of 414 per share. That's the word coming in for Indian Bank. Of course, the QIP was raised. What do you make out of an Indian bank? Do you think it's a buy on dips there as well?
So very strong price action in Indian Bank in last couple of months. Stock is continuously moving in higher top, higher bottom formation. Stock is almost on a verge of giving breakout on the long-term chart. So almost if stocks manages to hold above 430 level, then possibly we can see a stock to really further higher, and we may see a target of around 500 for Indian Bank on the higher side on a positional basis. So overall structure for Indian Bank is on the bullish side. Buy on dip should be your strategy. One can buy and accumulate with stop loss of 410. Upside target for trading point of view 480 and 500.
ITC is clearly the stock of the day. CLSA has come out with a report. Actually, bunch of foreign brokerages have come out with a report on ITC, and the analyst takeaways maintain in the outperform rating, target price of 495. It speaks about the focus on FMCG, which is expected to solidify the business, cigarette business, which is likely to consolidate, and the medium-term outlook remains positive in terms of volume if taxation remains stable. It also talks about companies' next strategy, particularly on innovation, digital and supply chain issues and focus. Rajesh, come in on this one. ITC, do you think it's a good bet right now?
Yeah, definitely. ITC, after a long consolidation, now stock is breaking out of its last 4-5 month consolidation range. So looking at the near-term structure, we do expect that now stocks holds above 445 level, then possibly we can see more traction towards buying side, and then we can see a level of 470, 75 on the higher side. So overall structure is on the bullish side only for long-term structure. And after a consolidation of 3-4 months, now stock is breaking out. So I think yes, one should remain on the buying side with stop loss of 445. Upside target is 470, 75.
Rajesh, top idea for the day, according to you, given the charts, which particular one stock looks very attractive?
So I think cement space is looking promising, and I think one can look to buy at Ramco Cement at this moment. Stock is enjoying its breakout level on daily, weekly time frame, and looking at the buying action post this opening, we believe that Ramco Cement can scale up to the level of 1085 to 1095. So one can buy Ramco Cement for with stop loss of 1035.
All right, Rajesh, we're just going to leave it at that. Thank you so much for taking out the time and having this conversation with us.
Okay, thank you.
All right, let's actually navigate our discussion to the fundamental side. Of course, enough ground needs to be covered. As I always say, we need to talk about ITC stocks typically, which have been doing well in trade today. And of course, bunch of these banking names which have witnessing some amount of consolidation, if I may use that word, because we've seen some amount of momentum building in. But to take the discussion forward, we've been joined by Gaurang Shah, the Senior Vice President at Geojit Financial Services. Also a dear friend because I'm seeing him after a while. How are you doing?
It's always a pleasure to be on your show, Nickey. Morning, yes, indeed. I had taken a break for about 10 to 15 days and back in action now with all-time high on the markets. And I guess best is yet to be seen on the markets. Nickey, good morning to you.
Good morning. Looks like you've had an early New Year celebration coming in, Gaurang. But what are you going to make out of the current stance that we're seeing for Nifty? FOMC meeting, how big you think that's going to play out for the markets? Of course, a bit of consolidation is expected to take place ahead of that. But in the last couple of sessions, we've seen bull run being relentless on the street. What do you make out of it? What's the next big trigger for the market?
Yeah, I was just looking at it. In fact, during my break, I had some leisure time to look at the markets. And, the anecdotes that I pointed out, I noticed, Nickey, was that on 2nd of November, just about 40 days back, Nifty was below 19,000, 18,860 or 70 thereabouts. And from those levels to surpassing 21,000 in 40 days, I think we have done the best that we can during this time. I cannot rule out a minor pullback, profit booking, maybe a day or two of correction, intraday correction, whatever you may call it. But the momentum seems to be very, very strong. Especially on the political front, I think the noise is growing louder with respect to the next year big general election, Nickey. And of course, the earnings for the third and the fourth quarter, our assumption or expectation is that we are likely to do much better with respect to the US Fed. I think gone are the days when we used to, largely react to these news flows. And from the beginning of this year, Nickey, we knew that interest rates are going to move up in the US given the kind of trajectory of inflation and etc., etc. And they need to do something out of the box to rein that in. So I think comments last time around what we heard were a little bit soothing. Let's hope that they are in the same line. But even if it is otherwise, I don't think our markets is going to react hugely negative, maybe a knee-jerk reaction. That too, I would discount that.
All right. But much of actually the relation of this is seen with the FII flows, which thus far haven't really been supportive for the markets. And now the expectation is that in the run-up of general election, you will see those flows coming back. Typically, phenomena that has worked out at least for the last 4 general elections, that there is some flows and then in Indian equity markets. By virtue of that, A, do you see FIIs coming back into the markets in a big way? B, do you see bank stocks doing extremely well? And if yes, what's your preference, PSU or private banks?
So I'll answer the B part of your question first. So we as a brokerage house, since last year and the year before that, we were of the opinion that banking and finance, I would like to club both these. And in banking, you have private sector banks, public sector banks selectively, which will do well. Strong NBFCs, diversified microfinance companies, housing finance companies will do extremely well. Numbers are going to look much, much better. And the gross NPA provisioning is likely to come down to a great extent, thereby having a much, much positive impact on the profitability. So we remain, and I would in fact go to the extent to say that at least 15 to 20% should be dedicated to, of your portfolio I'm talking about, should be dedicated to the banking and finance. And over there, public, private, as well as diversified NBFCs would be your preferred choice to be invested. FIs coming back, I don't think they can ignore India, Nickey. I always say this, you can hate India, but you cannot ignore India when it comes to FI flows. And our numbers are there to speak for itself. Be it GDP growth rate being reigning in inflation, be it interest rates for the 5th consecutive time, the RBI, as advised by the Monetary Policy Committee, has taken a pause. And our view or anticipation is that if things remain where they are, and if we get back a little bit lower on the inflation, then possibly Jan-Feb, March 2024, we can expect a small interest rate cut. This is provided all the data points are in place. So FIs will have to come to India. Maybe they like it or don't like it. I don't.
All right. Given the kind of growth that India has also been clocking, I am sure it's not an economy anymore that can be ignored. But coming back to ITC, that's perhaps the stock of the day, and of course some amount of analyst meet which took place, and they spoke about the strategies being solid across the board for ITC. Do you think it's all smoke, no show for ITC now?
No. In fact, we are positive. Let me say this, and very excited about the stock. If you remember, Nickey, I think this was one FMCG stock, despite of being a heavyweight. Actually, heavyweight means it couldn't move from 180 to 100 for a prolonged period of time. Once it took off 200, we saw it going towards 260, 275, 300. Then it languished over there. And then it crossed over 500, and now it is hovering around 430, 460. We remain positive on this particular stock. And I think other than the cigarette tobacco business, which has shown great contribution to the balance sheet, FMCG, paper, hospitality, and other businesses are likely to throw in much more positivities on the balance sheet of ITC. So we are maintaining a target of 485 to 500 as of now. In case third quarter numbers are better than what our estimates are, Nickey, then we will revise the target upwards. But it's definitely a buy. There is no smoke, but it is fundamentally very strong.
All right, that's the word coming in. Brokerages call across the board. Do bear in mind the fact that they've been pretty bullish. Talk about CLSA, Morgan Stanley, Jefferies, all of them have maintained either an outperform rating or a buy rating coming on this one. And according to Gaurang, one more quarter of good performance and they will see further uptick or probably revision coming in on the ratings. Gaurang, last question that I have for you. Primary markets have been buzzing again. Bunch of names that have come through. And in today's session, at least in today's trade, you will see DOMS Industries, which will open up for subscription. And of course, you will also have another player, which is, an affordable housing finance company, which will open up for subscription. Between the two, what do you like, and your top recommendation between the two?
So India Shelter Finance Corporation Limited is the other company other than DOMS, which is hitting the street. We have just released an IPO note towards subscription, recommending a subscription rather for India Shelter Finance Corporation Limited. One more addition to the housing finance segment, but this company concentrates in Tier 2, Tier 3 and rural areas, gives loan towards renovation of loan, buying a plot, construction of possibly a structure, and of course loan against property, etc., etc. Valuation looks decent. It remains to be seen the performance in the Tier 2, Tier 3 and rural area. But from a long-term point of view, we have given a subscription rating to the IPO of India Shelter Finance Corporation Limited, Nickey.
Yeah, and I think you also missed capturing on an important point, which perhaps is the core fundamental of this one. Westbridge Capital is also, primarily the promoter company of this one, and of course there is an OFS which is happening. Nexus and Madison also will be pairing in some amount of stake. Apart from that, what do you like in terms of fundamentals for this company?
Well, I think the focus, Nickey, I think which they have, not many company, of course now the initiation is there, but this company has been there for a pretty long period of time, and they've got their grassroots firmly in place as far as Tier 2, Tier 3 cities are concerned, and rural India. They've got about 200 plus branches spread across India. And my sense is, and I travel a lot, Nickey, both more for the work purpose, less for leisure. So whenever I travel, I come across a lot of rural, semi-rural Indian areas. Tier 2, Tier 3 cities is where even we focus in terms of increasing the participation in the equity market with new clients getting registered. What I have seen is that there is tremendous amount of opportunity in metros and Tier 1 cities. We are possibly reaching a congestion point, and even the affordability is much, much higher compared to the Tier 2, Tier 3 cities or rural India. So my sense is that it's a great business model, and they are possibly focusing in the right geography in terms of taking the business forward.
All right, and no recommendation coming in for DOMS Industries because the IPO also opened up for subscription today, and the price band has been fixed anywhere between 750 to 790 per share. The company plans.
Well, it looks good, but the regulation binds me with respect to giving out recommendation in case if we don't have a coverage, Nickey. So I'll give it a pass.
All right, Gaurang, we are just going to leave it at that. And thank you so much for taking out the time and joining us.
Thank you. Great. Thank you. God bless. Bye.
Let's also talk about IPO alerts. Well, primary market is buzzing with activity. DOMS industry, we are going to be speaking to the management also today. So do catch us live there. But today, just to give you a long and short of what we are covering, DOMS industry opens up for subscription today. Well, 750 to 790 per share is the price band. The company plans to raise around 1200 crore. It plans to utilize proceeds to partly finance the cost of establishing a new manufacturing facility. Apart from that, India Shelter Finance Corporation. We spoke about that with Gaurang also. He's given a subscribe rating to this one. It's an affordable housing financier, India Shelter Finance Corporation, 1200 crore. Again, it's planning to raise it's a majorly an offer for sale by its selling shareholders. The IPO consists of a fresh issuance of shares worth around 800 crore and OFS of around 400 crore. The company has three major investors, Westbridge, Nexus and Madison. Even as other two shareholders would be paring its stake, it's Westbridge Capital, an investment firm focusing on mid-sized company in India, which is expected to stay on post its regulatory lock-in period. The price band for this offer has been fixed at 469 to 493 per share. The issue will open for subscription on December 13. But we've also spoke to the management of the company to listen to this piece of conversation. Okay, then let's get the concepts out of the way, but let's talk about your business mode, because your AUM thus far has been better than most of your peers. Just looking at the peer group comparison, 6 month ended, your AUM growth was around 43.3%. And something in the like of Aadhar, Housing Finance, Aavas Finance, Aptus was in the range of 20 to 30%. What explains this kind of growth? How sustainable is this growth, and what are the levers of this?
I mentioned there's a lot of demand in market, typically on the housing side. And if housing is growing, then automatically housing finance industry, particularly industry where we operate into, that have a chance to grow in those directions. So from beginning, we have a strategy to have a structure which is covering pan-India operations, basically. So we are one of the very few companies which have operated from day one across country. Now, with 15 states, I think we cover almost 94% of market. So this gives the levers around that piece to go deeper into market, to have a more penetration in those markets and build more branches and get a more volumes. So this is an added advantage which we have. Secondly, from beginning, we have a right blend of technology with people. So ease of doing business is our mantra when operating in field. So giving a better turnaround times in market to the customer. So our turnaround times for login to sanction is merely 3 days. So actually we are giving justice to customer in 3 days of time for his loan requirement, whatever it is, and eventually another 3 days to disburse that case. So this brings a lot of traction there. And third, important engagement with customer directly. So depending upon field force, instead of involving the third party intermediaries, this brings a lot of push from our side and hence better execution and getting the desired number which we look for.
All right, and you expect the outperformance as compared to that of its peers to continue going forward too, right?
So depending upon the technology and blending with people, our distribution, which is, fairly well spread across 15 states, and direct sourcing. These are the three factors which is giving a good impact around. And that's our USP.
What is your
also.
Strategy?
And that's our USP
that's,
also.
That's exactly, yeah, I was exactly going to ask you the same question. Well, that was the management of the company talking about the AUM growth being higher as compared to the peers, and also the strategy to remain well ahead of the game. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for the rest of the page, stay tuned into moneycontrol.com and Moneycontrol app.